this really interesting change to the Procter & Gamble profit-sharing trust. In 1992, P&G preferred stock was still relatively new. It was kind of in its infancy, if you will. And to reach a point this past year where preferred stock is gone, it's the big pile of preferred stock in the P&G vaults is zero. There's nothing left. It's pretty amazing. But the interesting thing, and what's not being talked about yet, is what does that mean for our clients, and what does it mean for many Procter & Gamble employees? Well, at the highest level, it means some people are going to get a haircut. They're going to get less money contributed to their retirement plan than they had in previous years. Furthermore, that might mean they themselves can't put money into their retirement plan, which means their taxes go up. So all in all, there's less money being saved potentially for some Procter & Gamble employees within their retirement account. And how is that even possible? And it goes back to this weird nature of preferred stock. On an annual basis, there's a maximum that you and your employer can contribute to a retirement account. It's called a Section 415 limit. This year, I believe that number is $69,000. So it's a lot of money, right? Well, just imagine, and we have clients who are in this situation. Let's say last year, P&G put $80,000 into their retirement account. How's that possible if the limit's $69,000? Preferred stock is exempt from that calculation. So, if the preferred stock is now gone, P&G is not putting preferred stock in the account anymore. They're putting cash in the account. They're now limited to that $69,000 number. But they had been putting in 80, but now they're only going to put in 69. Oh, and guess what? Client can't put a dime into their own retirement account with P&G. So they literally are getting, in that instance, $11,000 less from the company. That's a pay cut, in a way. And we have not yet seen any specific guidance from P&G if they plan to equalize that. Are they going to make these people whole with restricted stock units or something like that? We just don't know. Why is it important to think about that? And when will this actually start to affect the client? Well, it's probably affecting you right now, because you may have already received notice when you look at your pay stub and you realize, hey, they're not withholding any more money and sending it to my savings plan anymore, which is their 401k. That's not happening. If that's not happening, it means you are one of those people who's being affected. Or if they've really reduced the amount, you're one of those people that's being affected. So it's an odd situation because the P&G plan is on a fiscal year instead of a calendar year. So for this year, your options for dealing with this increase in tax because you can't contribute to your retirement plan is pretty minimal. Not a lot you can do. Even if you were to enroll in the high deductible health insurance plan at P&G and use an HSA and get a deduction there, it's not going to apply until next year. So, but that's the key. It's next year. You have to be ready to make other tax-deductible types of contributions, such as enrolling in the high deductible plan, which might be going on right now. The enrollment might still be open. Think about doing that, and you can maybe get back to where you were on the tax front. If not that, there are tons of other options for you to evaluate when it comes to how do you manufacture income tax savings. But finally, you really need to be mindful of and aware of communications from P&G about people in your situation. How will they handle this haircut? Will they give you restricted stock as some sort of makeup or not? But it's important to understand it, because if you've been planning and you're modeling out your long-term financial projection, if you continue including that same dollar contribution that you had been receiving, you're overstating your savings and your financial plan is not going to be as accurate as it should be.